Hello, my name is David Everist, and this is the Minor Dave Everist Report. And I'm going to be sharing with some research that I've been doing that Oregon goes into effect on the first of the year. It's called a gross receipts income tax. And it's not just on companies. Now, it's just for products sold and services sold in the United States. So Nike's got a bunch of cutouts in it because of their free trade zone in Portland. And other companies do too, because if you are importing it through the port of Portland from overseas and it's headed for a different market, the tax won't apply because federal law says it can't because of the 1933 free trade zones that Roosevelt passed. And then, of course, you've got enterprise zones, and well, as an enterprise zone, investments there that you have there federally won't be, you'll have 0% capital gains if you go into an urban area and revitalize it and make investments, and you hold it for 10 years, you'll pay no tax, at least to the federal government. You'll probably have to pay one to the state government because they're in their wisdom. They think that if you make more than $1 million in a year's time, they can tax it at 0.57% plus a $250 minimum. So, meaning you have to pay them $250 plus 0.57% on all income above $1 million. Now, grocery stores are exempt, and I'm assuming the suppliers to grocery industry, because it says the grocery industry is exempt, and certain dividends and profits are exempt for major corporations that deal internationally or even nationally. Say you're a mid-sized company and 95% of your stuff leaves the state, well, that won't be taxed. But if you're an out-of-state company, everything you sell into Oregon, once you reach $1 million, you have to pay taxes on that. By the way, this affects doctors' offices that have medical groups. Now, you might not be a partnership in like a company. A group is where a group of doctors get together and they share facilities and they share the cost of it. But because they're a group, they're going to get taxed all except the first $1 million of the group. But then, of course, you have in the group, you'll have senior group members that make more money, and then you'll have junior members of the group that make less money. The guys that make less money, even if they don't turn $1 million, they have to pay like they made $1 million because of the group. This goes for lawyers that are in groups. This goes for any professional like lawyers or attorneys or consultants or even what do you call it? Accountants. Now, if you were an employee and you work for a big major corporation and you own stock in the company, well, then you can't be considered an employee and your money's taxed over $1 million. The company may not be taxed, but you will be. So this is a particularly heinous and serious tax because 0.57% is a pretty big number on all on gross receipts. By the way, what if your business makes more than $1 million, but you only clear 3 to 5% because you have a low margin business? You're making it on the margin, And yes, you might be making a salary off your business, because if you're an LLC or if you're a sole proprietor, well, you might take a salary because you can, and then the profits might not be all that high. So it's about running cash flow and running where at least you show a little profit so you can hold it in reserve. And then you're also talking about, well, you have to keep a certain amount of capital in reserves on your business, so if you have a downturn, you don't go bankrupt. Well, this is not good. This will be, think about it. Everything you're going to buy is going to, from a company that makes more than $1 million, you're going to be paying a tax of 57% or 0.57%. Well, that's a huge tax. Oregon expects to collect a $1.4 billion on this in additional revenue. I don't think they can get it, because I think businesses will quit selling to Oregon and they'll just quit conducting businesses, except for those exempt ones where they make very little money out of Oregon. And if you're a distributor, right? Oh, like Amazon gets a break, right? All the Fortune 500 companies get a break. All, unless they're selling directly to the market of Oregon. If they have facilities in Oregon, but their product is destined for somewhere else, well, they don't pay no tax. Because federal law says the state can't charge them over and beyond a regular income tax or a corporate tax. They can't add a wealth tax in Oregon on a company that's doing international or national business. So what this means is, this is a tax on people that can least afford it. And there we stand. Get out of Oregon. It's worse than California for taxes, at least on income tax. It's a really progressive theft tax, because they're coming for you. They want all the nickels and dimes they can take from you, and all the dollars they can take from you, and give you nothing in return. Have a good evening, and I'll talk on another day.